RevOpsAF, the only podcast for people who are RevOpsAF and want to learn all about things that are RevOps AF.
Our goal is to give the revenue operations community, that includes marketing, sales, and CS, for any of you not paying attention, the skills needed to accelerate their careers.
Hello, everybody. Welcome to another RevOps AF podcast episode where we are talking with Cliff Simon, who is the CRO over at Carabiner Group. And today we're going to be talking a little bit about revenue operations and how RevOps is either different or the same or some mix of both at VC-backed versus PE-backed versus bootstrapped companies, and also getting into this whole notion of change management and how RevOps can best be a change agent and kind of support their companies as they go through changes. So we've got a lot to unpack there, dive into there. But Cliff, maybe give us just a quick introduction on you and the Carabiner Group, and then we can dive into some of that stuff.
Sure. Yeah, I've spent about 2 decades now of my career in mid-market and enterprise in the go-to-market space, and been here at Carabiner since just about the very beginning. Got to grow the company bootstrapped into our exit 3 months ago to SBI. So we are part of SBI Growth Advisory, which is awesome. They're a strategic management consulting firm that competes against MBB, servicing PE-backed companies, 100 million to billion plus, and then the largest of the large. So it's a lot of fun because the problems that I get to see at the lower end of the market are the exact same problems we're dealing with up market. It's just, to your point, like change management's the biggest difference.
Yeah. Yeah. And stuff like that, I don't know, like having been at smaller companies and things like that, a lot of times you can feel like the problems that you're facing are, unique to yourself. You're like, geez, I've got to be able to grow out of these things, right? But what you just mentioned, you see a lot of the same problems. These large, big, massive companies have the same sort of problems that these early stage companies have. But before we dive into that, I guess I'm curious because it's not every day, and you're in a kind of a unique spot on the RevOps consulting firm side for Carabiner Group, being a CRO, being on the selling RevOps services, but then also being on the sales and go-to-market side, now going through an acquisition yourself. So what's that process been like? What's surprised you? How long has it taken? Is it still going on? What are some of the things you can share on that?
The process itself went pretty quickly, I think, all things considered. And I think a really big portion of that was when Seamus and I were sitting down and figuring out what we wanted to be when we grew up. What did we want Carabiner to be utilized for? We had always thought about a strategic exit 5 years down the road. Thought that would be a fairly lofty goal. And we set up all of the data tracking, the metrics for things that we knew that our most likely buyer, either another consulting firm or a PE, would want from us in the future. So it made it really simple as far as putting the data room together. So early advice to anyone out there that has the aspiration that they may one day want to go do that, get your data in order from the beginning, because it makes it a lot easier to tell that historical story.
Yeah. Yeah. And some of that stuff, right? Like you don't need to overcomplicate or over-engineer, but yeah, think about what the future does look like. And it's not that you necessarily need to, I'll say, build for that future from day one, but the things that you can put in place early without getting overly complicated, like definitely do that, because it'll only prove to benefit you in the future.
Super beneficial.
Yeah. And so when it comes to, I guess first, before we dive into now that you've merged, or I guess are owned by a larger consulting firm, you've obviously had a lot of different RevOps consulting clients in the past as well. So first, before we dive into the differences of revenue operations between companies at different sizes and stages and ownership, help us define RevOps first. As we talk about RevOps in this conversation, what does that mean to you? What does that mean to Carabiner Group? What is the definition of revenue operations?
The way I think about it and the way we typically approach it is, what's your customer's buying journey? How do you align your go-to-market process or set of go-to-market processes to that buying journey? And then how do you use technology to meet that need? And for us, we are lead to cash. So We are tech agnostic, everything from the marketing automation platform, the ABM platform, your conversational intelligence, your sales engagement platform, your CRM, CLM, CPQ, all the acronyms, all the way through ERP and that revenue recognition. So we'll touch it all. Salesforce, HubSpot implementation, NetSuite implementation, and then we typically call it about 150 tools that we'll touch in that life cycle.
Yeah. And so you've seen probably a bunch of different, I know you've seen a bunch of different verticals, industries in terms of your client base. And now you're probably seeing a bunch of different companies with the acquisition that you've gone through as well. And you said obviously going from lead to cash, right? So you covered truly marketing, sales, post sales. So first, as we look at VC backed versus PE backed versus bootstrap sort of companies, talk about your own experience in serving them. And what are some of the similarities, maybe with growth goals and revenue related goals, go-to-market related goals? And what are some of the differences that you've seen?
I think the similarities typically come in size, and they typically come in your go-to-market motion, right? Is it a velocity sale? Is it something that's a traditional mid-market play that's in the 20 to, let's call it 70K range? Or is it a true enterprise motion when you're selling a 6 to 7 figure item? I think those buckets typically lend a lot more to the direction and molding of the systems and processes than anything else, because those are three separate ways that buyers interact, right? Super transactional, you can make a decision quickly, whether you're selling to a mom and pop or you're selling to a small unit within a very large organization. Those things usually happen transactionally. That middle layer probably takes a little bit more time. Yes, we're seeing it take longer than before because of finance and procurement being far more involved. And then on the opposite side, you need really good process on those 6 to 12 to 18-month sales cycles, because we need to understand what's working. We need to get as many indicators early on in a sales process to make sure that things are going well, that we have those early indicators. Otherwise, we're 12 months in and oh my gosh, we don't have anything close to the actual pipeline coverage we thought we did. How do we get ahead of that then? So I think those are like the similarities regardless of company size. The places where it tends to be a bit different, change management is completely different when you're talking about enabling a team of 5 people versus a team of 50 versus a team of several thousand. Right? Just the time, the effort, the forethought that has to go into it, and then the constant ongoing training becomes a lot more onerous, obviously, the bigger up you get. Other things that are fairly different at that size and scale, oh man, there's industry specific stuff too, right? We do a lot of tech, a lot of media telecom. We do a lot of finance. We're doing a lot more with insurance and those regulated industries, health and life sciences. Those places, you need to have that much higher aptitude for the rigor and the care that you take around PII or HIPAA or any of the other regulatory bodies that rule in those places. So those tend to be a big differentiator too.
Do you see differences in terms of, I'll say, problems or areas that these companies are looking to tackle that they bring you in for, that they bring a RevOps services firm in for, or is there a lot of overlap there?
There is a decent amount of overlap, and I think for most folks, the overlap is around setting the appropriate foundation. Do you have a taxonomy as far as
like, what does that, what does that mean? What's a healthy RevOps foundation look like?
An internal taxonomy where everyone understands what the glossary of words that we use every day mean, right? Because an MQL means different things at different companies. A sales qualified opportunity means different things at different companies. The sales gating and the requirements, the exit entry criteria from sales stage to sales stage means different things at different companies, and that's fine, but everyone internally needs to be on the same page with that information. The other thing is the user adoption, right? You have to have great user adoption, and you have to have good data governance as far as the things entering the system and the way that's done, so that you can have the reliability of the data to actually give you a picture of what's going on. Otherwise, bad in, bad out, right? Garbage in, garbage out. If people are putting crap into the CRM, it's really difficult to be able to then extract any type of actionable insight from that information. Those are those like baseline pieces that have to be in place. Once you have that, you can start building up your second, third, and fourth story of a house. But you have to have a strong foundation because otherwise it's a house of cards and it all just falls.
And what about, so you mentioned I guess the foundation on some of the things that folks will need. I guess I'm curious too on how these different types of companies are building their RevOps function and their RevOps teams. Have you seen, so we talked a little bit about the type of work that you're typically doing when you come into these types of companies. What does RevOps look like at these different types of companies in terms of like people and just like structure? Are they operating pretty lean? Do they have dedicated resources within each sort of function? What do those things look like?
So I think by and large, what we've seen is folks go to a departmental model as opposed to a functional model. So functional being processes, systems, insights and data and enablement. We'll typically see folks still be at an earlier stage where they're marketing ops, sales ops, CS ops, and then there's usually someone reporting into finance doing FinOps. Also seeing a lot more of RevOps starting to go towards finance more and more. Bootstrap definitely runs lean. Don't have money to burn because there's no money there. VC tends to be the one that's willing to throw the most dollars at a problem. And like the thing with VC is that you've got a longer time horizon, right? You're typically looking 8 to 10 years for a payback period. Can we execute on this thesis in that time? Whereas PE, you're typically looking for a 3 to 5 year execution, which means you have to start solving problems now because you're already behind the 8 ball. Now, if you wait a year and a half in, wow, it's lost time. So you need to be able to execute quickly. I think in those cases, they're far more likely to smartly deploy the capital and make sure that they're getting the return in early years. And I think there's also a tendency to do more experimentation and or drive different pieces together insofar as maybe they're a little bit more willing to be interesting in the way they deploy capital, not necessarily focus on headcount, but how can we drive a process improvement? How can we leverage technology better? How can we eliminate friction from the buying cycle? As opposed to, I think VC has a tendency to just throw money at a problem and say, we're going to fix it. But a lot of that's changed over the last 18 months.
Yeah, I was going to ask that question too. How has that changed even within the different segments that we're talking about, PE versus VC backed versus bootstrapped over the last several years? Because obviously the market has certainly shifted, right? And it definitely looks different for all of those companies, I think, today than it did in the past. So what sort of changes have you seen even within those spaces over the last 2-3 years?
So I think on the bootstrap side, you're focused on growth. If you're bootstrapped, you've got to be profitable or damn near break even, because otherwise you don't have the business to keep going back to, right?
Yeah.
On the VC side, everyone's trying to get to the rule of 40, but you have to be heavier on the growth than the EBITDA, right? If you're a 20% growth company, 20% EBITDA company, that's not as sexy or as valuable to the market right now as if you were 5% EBITDA, 35% growth. That growth is still getting the bigger multiple, but they want to know that you can sustain yourself. On the PE side, the bigger the better. Ideally, you're going for a strong EBITDA, call it 20, 30%. And the best companies are looking for that growth multiple as well. If you can drive that number up to 30, 40, 50% year over year, that's really strong. The other pieces that I know folks are looking at very tightly are NRR and GRR. There's a very strong correlation right now between net revenue retention and the multiples that software companies are seeing in the marketplace. And if you look at the historical data over let's take it like the last 24 to 30 months, there's a really strong plot line where the higher your numbers were as far as magic number, GRR, NRR, the better the multiple was. So I think that's going to continue to hold.
And give people quick definition of the rule of 40. And then you were talking about NRR. What are some typical benchmarks or targets that folks should aim for? And again, same question, any differences that you're even seeing on like goals there across those different types of companies that we're talking about?
Yeah, rule of 40 is, or magic number is when you add together your year over year growth percentage plus your EBITDA, your earnings before interest, taxes, debt, and amortization. That's how companies are being judged today, right? It used to be growth at all costs. Now we're looking at this number. The higher you can get, the better. Companies that at the 50, 60, 70, 80 worth a lot more money, right? NRR, GRR, good numbers right now. We've got some PE firms where like I know the goal for the portfolio is that those companies are running at about a 95% NRR. And if they're running at that range, the return's pretty solid. They're looking for GRR to be pretty darn close to that as well. With the goal again that there's still growth, right? They're adding on top of that. So anytime you can keep your existing base, it's always more expensive to acquire a new customer than it is to keep one that you currently have. So
Yeah. The other question for you, we talked a little bit about acquisitions, and obviously like you've been through one yourself. I'm sure you've seen clients go through them as well. Obviously, as you're servicing PE firms and other folks like that, they're naturally going out and selling, buying a lot of different kind of companies. So talk a little bit about the goals that differ or are the same from company to company, depending on kind of who owns them. But obviously, like anytime you have an acquisition or you buy, sell, or even you go through these different stages of growth, right? Maybe you start as a bootstrap company, you become VC backed, or maybe you've always been a VC backed company, but last time you raised money was when interest rates were zero and it was growth at all costs. Now you're going out and trying to raise money, and it's everyone's talking about this rule of 40, which you've never heard of before until fundraising now. So all those things come with a lot of change, right? And how can RevOps best support those sort of company level changes, right? Like how can they be best prepared and be the best resource during those times of change?
So I think the RevOps has such an amazing opportunity anytime there's upheaval or transition in an organization because they are the keepers of truth. And what ends up happening time and time again, I'm sure you've seen this, you've got a sales leader, you've got a marketing leader, you've got a CS leader, everyone's showing up with their own numbers. When you're going through this, like there's one set of books that gets sent over, right? That everyone's looking through, that your valuation is based off of, and you're both sharing and looking like, okay, right, what's actually real? I think that's one of the beauties of having a strong RevOps team, right? You can trust the data and you don't have to second guess the things that you're presenting, right? Whether that's as part of a deal or as part of going to your board on a monthly or quarterly basis, right? It's that confidence that it brings. And having all of those ducks in a row just makes it that much easier to be able to merge systems together should you go through M&A. We were doing that within the first month of us being acquired, because we had kept it fairly clean. We knew we wanted it down the road, so we kept it as vanilla as we could in our Salesforce instance. Keep it simple.
Yeah. And what are, maybe you already answered this, but what are some typical mistakes that you see, or even just like areas of challenge that you see when companies are going through these changes that exist on the RevOps side? Again, like you have this kind of unique perspective of supporting a lot of different kind of companies and clients, and I'm sure there's a lot of things where you walk in and you're like, oh, it's one of these again, right? What's the typical like biggest kind of gotcha that you see?
Egos.
Yeah.
Now, for a lot of folks, this is the thing that they built and they're proud of what they did, rightfully so. But maybe the thing that they built doesn't serve the new org. Maybe there's a reimagining of products and price books, right? We're going through one right now. It's a multi-billion-dollar merger. The one company I think has 60,000 SKUs and the other one has 500. So there has to be a reconciliation of that. There has to be an understanding of how that's going to be bundled in the future. One's on one CPQ, one's on another CPQ. So like, which system do you end up choosing? There's a lot of that goes into this. Some people are huge fans of one sales engagement platform versus another, or one conversational platform versus another. That's the hard part, is the hearts and minds, right? We've got it here. I'm a huge Google guy. SBI runs off of Microsoft. So I'm using Outlook and Teams now. It is what it is, right? Do I love it? No, that's part of the status quo. Yeah, exactly. So there's just little differences that come along the way. I think a lot of the time it's personal preference and ego that sort of gets in the way. Number two after that is a lack of documentation, right? How do we know what's tied to what? How do we safely unwind things, right? You're trying to get two systems, two teams to come together or more, right? We've done that before. We're throwing together 7 or 8 companies. And the challenge there is not knowing where things are tied because you have to safely unwind it, bring it together, merge that data, and then get all of that into either a new system or one of the older systems that might have been retrofit to work as the new receptacle for all of the data. Those are probably the 2 biggest gotchas.
So I guess a question on that, because they think about the first thing that you mentioned, in a sense, like everything we're doing within our companies today is in essence temporary, right? Like businesses are going to change and grow and evolve, whether that means the tooling that they have, the people that they have, the processes that they have. And so like eventually everything we're doing today is going to be outdated, no longer applicable because there's going to be new stuff going on. The flip side of that is he also mentioned having some sort of documentation of what you are doing today is very important so that you can figure out as you make those changes, how you make them intelligently, correctly, how you unwind or double down on things in the right way. So how do you balance those two things? Because on one hand, you obviously don't want to, I don't know, overinvest in things that are just going to be outdated, but at the same time, you can't just have nothing. And so how do you find the right balance with that kind of documentation and figuring out where to, I don't know, where to draw the line?
I think it's a great question. There's such tension in that balancing act of what is enough development within these systems to give us the gains that we need from an efficiency perspective and what's overkill. And the way I usually advise folks to think about that is start everything in a manual process, document the manual process. And then once you've actually settled in on something that is a true process that hasn't changed over, let's say, in some cases on the smaller things like a couple weeks or a quarter, then start talking about how do we add that to the roadmap? How do we build that out in a way that works for the long term? Especially if you're like an early company, right? And you're still trying to figure out product market fit. Don't start automating stuff because it's not necessary, right? And you're probably just going to waste time and effort, right? When you're early, you have to do as much experimentation as possible and figure out what's going to work. When you're bigger and you know what's working, keep focusing on the things that are working, right? This isn't rocket science, but we all get shiny object syndrome.
Yeah. I'm a big believer in the start manual as well. Like I always, whether it's tell people on my team or tell anyone that's willing to listen, is like if you want to, I don't know, if you want to do something new or start something today, I always say, if you had 2 hours to do that, what would you do by the end of the day to get that thing rolling? Typically, it's going to involve you clicking buttons, you using a spreadsheet, right? Like you doing manual things. And then from there, you figure out how to improve upon that. And yeah, the other, I don't know, I guess call it qualitative part, I think of at least my answer based on what you said is you got to rely a little bit on, call it gut instinct of knowing where that right balance is. And there's a range, but like at some point, you can feel when you start to over-engineer things and you are tipping in the wrong direction. And then at some point you realize where you're in the sweet spot of, oh, there's a little bit of manual stuff, but there's some automation. I've got things documented. Like this overall package is good. Not perfect, but good enough. And so I guess maybe I have 2 more questions for you. One on the RevOps, one non-RevOps related. So when it comes to revenue operations for folks that are maybe currently at a company that in the near future will likely be going through some sort of big change, right? Whether it's raising a new round of funding, getting sold, getting bought, IPO, whatever that might be. What's one piece of advice or like the one thing that you would recommend to revenue operators in that sort of position?
They have an incredibly unique situation compared to most of the other folks in the firm, depending on the way that the potential acquirer or what that situation looks like. You typically are being given a set of capital and you have to go out and deploy it in order for things to be successful. And RevOps, I feel, is that well, not the only one, but it's one of the places in the company that very often is seen as a cost center as opposed to a revenue multiplier, when it's quite the opposite. If you invest well in RevOps, it's been shown to drive up to 30% more ARR. It is a multiplier. It's a multiplier of process. It's that mathematical model that Jocko talks about, right? You're looking for 1 to 3% process improvement all the way across the customer journey. And that has a profound effect on the growth of the company.
Yeah.
And being able to give RevOps the ability to not be overworked all the time and allow them to have the resources to actually execute on things and not feel like they're just putting out fires, I think is a really exciting spot for a lot of practitioners, because they're like, oh my gosh, I actually get to do something and make a change instead of feeling like I'm just dealing with today's problem.
Yeah, no, it makes a lot of sense. If you think about the whole notion of being able to do more with less, like that literally is like the outcome that revenue operations, when done right, produces, right? Like you said, it's literally math. Like you have a compounding effect as you go throughout the customer life cycle by making these improvements. So that's one big thing. The other thing that came to mind as you were talking, and I guess maybe I'll ask you this question too. Have you ever heard someone say that they invested in RevOps too early? I've never heard anyone say that before. Everyone that I've ever seen that is either deploying kind of new revenue operations investments has always said they wish they would have done this sooner. So this is one of those things where when it comes to RevOps, right, like any company that is generating revenue has revenue operations responsibilities somewhere, and investing in that team and that function can have profound impact for your business and company, and the sooner the better.
The sooner the better. And it's really tough to go out and hire those people and afford all of the roles, right?
Yeah.
And you don't need to go out and get a firm like ours to come and help you with that right away, right? But what I would say is be data driven as an executive, be data driven as an entrepreneur, and start gathering that information. If you're super early days, you're not even in a CRM yet, capture that information in a spreadsheet.
Yeah.
But be consistent. Whatever methodology you choose, just be consistent, because once you have that consistency, that's what allows you to transfer things over from place to place over time, when and as it makes sense for you. But doing it haphazardly and not having that consistent data point and being able to show the arc and flow of things, that's where you lose a lot. So be consistent.
Yeah. Thinking back to my first CRM that I used at our business was just a Kanban board in Notion. And then eventually you upgraded to an actual tool and solution in HubSpot, and from there, right? But yeah, like you said, it doesn't need to be overly complicated. Start somewhere, but be consistent in.
Yeah, you build it over time. Hey,
Yeah.
Same here. We started off, so it sounds so ridiculous. We started off managing opportunities on sticky notes.
Yeah.
We had a wall of sticky notes, and then we'd go through the sticky notes every night before we had gotten our Salesforce up and running. And from a project management client perspective, we were running everything out of Trello, I think, for the first year and a half that we were a company, until we went out and got Jira, right? So over time, it wasn't overnight, right?
Yeah, I love that. The RevOps consulting firm using sticky notes for their opportunity management. That's awesome.
I'm terrible, man. I still have like sticky notes on my desk.
Yeah.
Like at least a dozen of them, at least.
Yeah.
So
hey, you got to kick it old school. I like the pen and paper for like
me too.
News and stuff like that. So
sticky, yeah. End of the day, clear out the sticky notes, So
yeah. All right, and then the last question for you before I let you run is, outside of Carabiner Group, outside of being a CRO, outside of revenue operations and the professional career that you have, what's one thing that you're passionate about or into outside of work?
I think I've done enough of these things with you guys that folks have heard this over the years. But right now I'm doing some woodworking with my son. It's a lot of fun. We're building a custom hall tree. So we built all the cabinets already. We're getting ready to build a black walnut bench top for that, and we're building the drawers this week. So I got to go get some more black walnut to be the drawer faces, because we finally decided we were gonna paint something where we wanted to be the natural wood. So we're excited for that. And then I play hockey. So love competing. I don't feel like I get to do it at work anymore. I'm definitely sucked into this whole better together story. I need to get that competition now. So I actually had a hockey game last night. That was good.
That's awesome. I don't play hockey. All I know is for all my adult friends that do play hockey is they play at 11 p.m. on Sunday nights because that's like the only time that you can get ice time.
We had an early game. We had an early game last night.
9 p.m.
No, it was like 8:10, like super
wow.
early. I was supposed to be a 9:40 start and it got bumped up to 8:10.
Yeah.
Everyone else loves it. I prefer the later games because my kids have to go to bed and I
Yeah.
always end up getting there a little bit late, but it was a good one. We won 4-1. I had a hat trick. So
Nice.
I'll take it.
That's awesome. That's awesome. We've got Cliff, the CRO, the woodworker, the amateur hockey athlete. No shortage of interesting things about you, my friend. But thank you for dropping some knowledge on the podcast and sharing some insights. I really appreciate it.
Yeah, thanks for having me. Looking forward to 25 in a certain city somewhere.
Yeah, we haven't. We'll probably announce it after this airs. But yes, for those listening, Cliff was a speaker at RevOpsAF 2024, which was in San Diego this past year. He's going to be speaking again at RevOpsAF 2025, which will be in a different city that him and a bunch of other early confirmed speakers are very excited about. So stay tuned on that.
Awesome. Thanks, bud.
Thanks so much for tuning in to today's episode, everybody.
For more great content like this, join our community at RevOpsCoop.com and check out the links provided in the show notes.
Keep it RevOpsAF, y'all.